Hey everyone, welcome back to Corporate Decoder. Today we're diving into a Form 8K filing. Get ready because it involves a company selling a whole bunch of units. It's like they're having a going out of business sale, but for stocks and warrants. Let's get started. This report is about LogicMark Inc. and it's an 8K form, which is basically a quick update that companies have to file with the Securities and Exchange Commission to tell investors about big changes that could matter to them. The report is for an event that happened on February 18th, 2025. So LogicMark, that's the company we're focusing on today. They're based in Nevada and their file number is 001-36616. If you need to look them up, that's the number you would use. This part is just some legal checkboxes, basically saying that this report isn't trying to replace or interfere with any other important filings. LogicMark's stock is traded under the ticker symbol LGMK on the Nasdaq stock market. So if you want to buy or sell their stock, that's what you'll look for. This just indicates whether the company is considered an emerging growth company. Turns out it's not. Now we're getting into the main part. This is item 1.01, which is about entering into a significant agreement. In this case, it is selling securities. On February 18th, 2025, LogicMark sold a bunch of what they call units and pre-funded units in a public offering. Think of it like this. They created a package deal to attract investors. They sold 2,260,000 units at 59 cents each. Each unit included 1 share of common stock and 2 warrants Series C and Series D to buy more shares in the future. They also sold 22,146,750 pre-funded units at $0.589 each. Each pre-funded unit included a warrant to buy a share of stock at a super cheap price of $0.001, along with those Series C and D warrants again. Right after selling, some investors used their pre-funded warrants to buy 3,006,000 shares of stock. All of these units and warrants were registered with the SEC. This means LogicMark followed the rules and told the government what they were doing. The Series C warrants let you buy shares for 59 cents, and the Series D warrants let you buy shares for $0.885. But here is the kicker: you can only use them after the company gets permission from its stockholders, which they call stockholder approval. The stockholders need to say okay to issuing more shares and possibly doing a reverse stock split, which we will talk about later. The Series C warrants expire in 5 years, while the Series D warrants expire in 2.5 years. The Series D warrants have a neat trick. You don't have to pay cash. Instead, for every warrant you use, you get 3 shares of stock. This is called alternative cashless exercise. The price you pay to use the Series C warrants can change. If LogicMark sells stock or similar securities for less than 59 cents, the warrant price goes down to match. However, it won't go lower than $0.118, which they refer to as floor price. Both the Series C and D warrants can be adjusted. For example, if the company does a reverse stock split. A reverse stock split is when a company reduces the total number of its outstanding shares, so if this happens, the price will be reduced as well. Also, if the stock price dips low around the time the company gets stockholder approval, the warrant price will be reduced, once again subject to the floor price. Here's the catch. According to the purchase agreements, LogicMark can't issue more stock for 90 days after getting stockholder approval. They also can't do what's called a variable rate transaction, which is basically a deal where the price of the stock is determined later. The pre-funded warrants are a steal at $0.001 per share. You can use them right away. The price to use these warrants can also change, like with stock splits, dividends, and other similar events. To manage all these warrants, LogicMark has a deal with Nevada Agency and Transfer Company. LogicMark also hired Roth Capital Partners as their placement agent. Basically, they helped LogicMark sell these securities. For their help, Roth Capital got about $1,017,783, which is about 7.0833% of what LogicMark sold. They also got up to $75,000 to cover their expenses. LogicMark made about $12.7 million before paying fees. They plan to use the money to support their products for general expenses and for working capital. Working capital is money used for day-to-day operations. The final details about this deal were filed with the SEC and can be found on their website. If you want to read the full agreements, they are attached as exhibits to this report. LogicMark announced the pricing and closing of this offering in press releases. These press releases are also attached to this report. It is important to note that this report includes forward-looking statements. In simple terms, the company is talking about things they expect to happen in the future. Of course, there's no guarantee that those things will happen, and the company cautions that numerous factors might affect the real outcome. The report lists all the documents attached as exhibits. So if you want to dig deeper, you can find them here. So what does all of this mean? LogicMark just raised a good chunk of money, but they did it by selling a ton of new shares and warrants. This could be a good thing. It gives them cash to grow their business and support operations. However, it also means that current stockholders now own a smaller piece of the pie because there are more shares out there now. This is called dilution. Also, the warrants could create more dilution in the future as people exercise them and create even more shares. The fact that the warrant prices can be adjusted downwards could be a good thing for the people buying the warrants, but it's not necessarily good for the company. Finally, the company is not allowed to issue more stock or enter into variable rate transactions for a period of time. This could limit their flexibility in the future. On the positive side, the company states they intend to use the funds for sales and marketing, which will help grow revenue. This is always a good thing and could lead to future profitability. Overall, LogicMark is a very small company. Given the speculative nature of the warrants outstanding and the risk of further dilution, the stock is likely to trade between 30 cents and 60 cents in the near future. Taking everything into account, I'd say the outlook here is neutral. With a bearish bias, there are real risks involved with LogicMark. The future is uncertain. Thanks for watching Corporate Decoder. If you found this analysis helpful, please subscribe, like, and comment below. Let me know what other filings you'd like me to decode.